Good morning. Good morning, YouTubers. Good morning, everyone. We've been here in and out. Let's check our programs, make sure they're running. They haven't put any trades in yet. Swing Machine is doing its thing. Let's make sure that we're running. Uh, that is so weird. I don't know why this little program, I got to refresh it. Let's get this thing kicked on. And is that one running? Hmm. Refreshing these. That one's running. Well, don't know why they're not kicking on quite automatically. The nat gas is running. Okay, so we got a couple that have got to refresh. They will. I'll have to look into that. Here we go. Gold. Yeah, gold was looking like a really nice buy. Still looks like a really nice buy. And the program hasn't picked it up yet, but it will. And these other guys will hopefully. I think I know what the problem is. Oh yeah, I got too much data coming through. I'm sorry. I thought we saved these. Would you like to disable? No, we got to go into the ES. I had too much data coming in. Changed it yesterday and I forgot to save it. Shoot. All right, so gold is working. Oil, that may also be a similar type deal. Let's see if we get this. Yep, I got too much data coming through. And nat gas is cooking. Okay. We're good. Bouncing things a little bit here. Yeah, gold. Gold looks really good. We were commenting about that last night. Gold and silver. You just want to keep active. So our other markets will populate just as soon as the charts get updated. It may take a minute or two. We should be all set. Sorry about that. And we've had a nice week with this program. We're good about first day we lost 500, which was really my fault. The second day we were up 1700. The next day we were up 900. Um, so and then yesterday we were down like about 150. So um, when it's all said and done, we're up about in those keeping score money wise, we're up about 2,500. We're running a profit factor of about three, meaning we're making $3 for every dollar we expended. And I need these charts to get updated. I'm sorry. eBay. All right. Made the same thing yesterday. Now, a lot of noise out there. This always happens. There it is. There's the ESH. Okay, beautiful, beautiful. That looks yep, that looks good. Is that cooking? Hmm, it don't look right to me. Okay, we're picking up on, oh yeah, there it is. Okay, we had a little, all right, we're okay. We didn't have an order, but my custom session got changed somehow. So I'm making an adjustment on the ES. I need to change something. It's not firing right. So we'll get it fixed. The NQ is all good. I think we're all good. Otherwise, I don't know how that happened. Dang it. Let's see here. Hmm. Yeah, okay. Well, that one's working. Should be. Yep, that one's working. Okay, yeah, we had a that oil contract had rolled. We had the wrong oil contract, and there it is there. Okay. All right, so trade number one is the NQ, and she took a short, and we'll let it manage it from there. All the trades that you see that are going to be going in are going in through a machine, through a program. We're going to try not to intervene. Now, we may make a decision to shut off early, um, but we never know an outcome. We're not expecting anybody to shadow these trades. I don't think that would be a good idea. I don't think so. I'll just say this too. If you find the numbers too big, right? Everyone's got a different level. There are plenty of members here that trade in much, much bigger size than me. They're like, Don, I can't believe you only trade a mini contract. I can't believe that. But that is our comfort level. However, yours might be a micro contract, which would be 1/10 the size. So you could trade micros, or because micros are scalable, 10 micros make up a mini, you could trade two, three, four. So it's all scalable. So you want to try to get away from making decisions with the money. If you find your eyes glued to your account, no matter what it is you're doing, and your eyes are glued to the money, and you're trying to trade the money, you're trading greed and fear, and that's probably not going to work out too well. And you're probably trading too big, right? You're trying to do too much too quickly, and you're just going too fast. You're driving the car too fast. Any questions, let us know. Hey, Edgar. Well, thanks. Yeah, this is a rather unique view. If you look at some of the other YouTubes, we have Swing Machine up. So we're gonna try to mix it up a little bit. Um, but thank you. So what's different here, I can only try to describe this to everybody. Um, I I don't do this anymore, but I used to visit, especially folks that were in Florida. I would visit their trading office, where they were. And that machine just took a winner there. So um what I would see, I would go into somebody's office and I'd see like even more screens than I did. They had tons of screens. A lot of money, right? A lot of money, wrapped up in equipment. They'd have a TV in there. Some of them had, brokerages that gave a little, blurb of CNBC, like all kinds of stuff going on. And I would sit down kind of beside them and I would just look, and it's like, okay. And they would start to scratch. I'm looking at this, I'm looking at that. And I'm like, holy smokes. And I just kind of would like watch and listen for about an hour. And they'd just be like all over the place, like just way, way too much shit going on from my point of view. So what I try to describe here, and we do things, we got multiple accounts, we got multiple approaches, but this particular approach that you're looking at now, I don't have a TV in the office. I can go look at the screens to make sure that the strategies are on the right markets and doing what they're supposed to do. But I'm not making any decision. I'm not going from screen to screen, doing this, doing that, that, and this. The machine is putting the trades in and is taking them out. And they may be losing trades. I just need to have an eye for the volatility of my overall account, right? I got to make sure that the strategy. So when you see here, this is the symbol, this is the Nasdaq, this is net gas, this is gold, this is ES, the S&P, and this is oil. They're running on a Renko, a classic Renko chart, and the strategy is what we call SMC open T-ball. The strategy has been optimized for each individual market. That strategy has been back tested. That strategy has been stress tested through the TradeStation program called Walk Forward Optimizer. So I don't have a guarantee of outcome. Nobody has a guarantee of outcome. If you're looking for a guarantee of outcome, you will be disappointed because it does not exist. Does not exist unless you're Citadel and you're getting the order flow in advance, and we're not, and presumably you're not. Um, but it does give us a yardstick, a model that we can measure. Now, the walk forward test on this program gave us the confidence to even move forward because it showed us that the strategy should be robust. And it's been robust this week. It's done just fine for us. But we're always comparing and contrasting our performance to the model. There's another trade. I didn't put that in. I should probably highlight that little window up there. It just, let's see, it went short. So here's the ES, and it just shorted at 59.01 at this time. The positions match because it's the strategy is short and we are also short. And you can see we got basically Yeah, it appears that we get exactly the same price. We don't always get the same price. Sometimes it could be a little bit of slippage. The nat gas is notorious for that, but the other markets are really pretty tight. So I didn't put that trade in, and I'm not going. Now I could intervene if I wanted to, but I'm going to choose not to, and we can chair it on. So we'll see how we do. The also embedded in the code, there the entries matter, the exits matter, but it's also got a timer, a clock. It's monitoring the time. It's also monitoring the number of trades. Um, I think the NQ it won't allow more than 5 trades on any one market. That's the max. But some of the markets, the back test, and there's the gold trade, long gold. I'm kind of happy with that one. Um, that what was I going to say? Um, some of the markets, when we optimize them, was only going to give us like 1 or 2 trades, right? There's a trade counter. So that's where we be. And thank you for everyone for stopping by. Be sure to visit the site. We've been doing this a long time, right? It's probably a miracle you found us because we don't really do any advertising to speak of. We haven't been doing this for 6 months or 6 years. Susan and I have been building algorithms to trade our own money since the early 2000s. We don't come from Wall Street. We don't come from Madison Avenue. We're just normal folks. We had normal careers. And we said in the early 2000s, what a bunch of bullshit this is. That's what we said. Susan worked for IBM and for Lotus. And I worked for surgical companies. I taught surgeons how to work with the latest and best surgical instruments of the day. We were always, we had a very fortunate life and we were investing and saving and doing all that stuff and had some wonderful, wonderful years. And, but in the early 2000s, became, more educated, more aware, and just said, what a crock of shit. It's all a Ponzi scheme. Sorry. Um, but there's nobody more skeptical than me. And I will arm wrestle you for the right to say that I am the most ignorant person in these markets. I need to be. I want to be able to go right. I want to be able to go left. So, um, if you want to believe what you want to believe, that's no problem. I'm not going to challenge you with that. You believe what you want to believe. And if you want to believe that the market sold off because of the interest rates, fine. Maybe it did. Maybe it didn't. Maybe it is. Maybe it's that. We just don't. We track the money flow. And our job is to go in and extract money flow. We're not hodlers. Any questions, let us know. Um, on the overall market, let me go take a peek. Bring into view, we're looking at Swing Machine. Yeah, Swing Machine. Next week we'll probably have to trade Swing Machine because, I know there's tremendous interest there. And she's doing a beautiful job here, actually. And bouncing it here a little bit, right? So we've been doing this program though. We set up this program on Monday, and our weekly performance, our net for the week is modest. We're up about $2,500, and our profit factor is about 3, meaning we've made $3 for every dollar we expended. So hopefully we have a good day today. We thought we'd give you a view. We may turn it down early. Now, we do reserve the right. You do too. In fact, we showed a video yesterday. We ran the entire day up until 3. We lost $150. But if you go back and you look at that video compressed, you can see that we were up several $100s, close to $1,000 at one point. So as a program trader, entirely within your prerogative to decide, when you want to turn on and when you want to turn off. What we don't think is too cool is to get too active. I mean, you can intervene in the program and take profits if you have reason to do so. But in the beginning, we try to lean on people to try to be try to sit on their hands. And but if you get any questions, I'll shut up and let you watch. It's pretty quiet in my office, pretty boring. Boring is good. Now we have, you know, I think tons. We have a ton of different proprietary tools and programs and trading robots. One of which is, and we made a video of it. You can go back and see it. We posted it the night of the 16th or the after, but we have a model, a timing model on the major indices, and that timing model compresses the price data of the indices, the price data of the VIX, and the price data of the yield, the 10-year treasury, and makes decision. Oh, okay. Hey, Sil, how are you? Good to see you, Sil. Sil just joined as a monthly member, I think, yesterday. So we want to say welcome from the Netherlands. And okay, so we just got another order, and that is on the NQ. She shorted the NQ. And in that model, that timing model, um, is a daily signal, and she shorted the market on the 16th. Monthly members would have seen it, and she's had a high watermark of over $50,000 in just a couple of days. And she nailed this trade, this pullback absolutely on the screws. But these machines are not trying to give anyone the impression or the expectation that this is some sort of holy grail, or that we have cornered the market, or that we never lose. That would be the wrong takeaway. Um, we do lose trades. We do have losing sessions and losing days. We try not to have a losing week. Um, a lot of our performance will be based upon what? Really upon market volatility. The more volatile the market, the better we're going to do. The tighter the volatility, and then it gets stingy. Um, so any case, but we're not giving out, um, our algos are presenting opportunities to our members, and but I'm not specifically saying, go buy Tesla, go short Tesla, go do this, go do that. I'm not a broker, I'm not a financial advisor, so we don't manage anyone's money. We don't give out specific recommendations to buy or sell. We're not making any claims that this is something that you should be doing. In fact, probably most people probably shouldn't, especially if they don't have an education. And but for those that want to take, that have some time, have some risk capital, have some patience, have some discipline, that want to learn how to program trade and want to save themselves some time and move in. And okay, we just got another, that happened so fast. I didn't even see where that came from. So that went in and took out a winning trade there. I'm not sure where that was from. I could go look. I didn't even, can happen pretty fast. We're getting a drawdown on the ES though. You can see we're short. The market's running a little bit on that one. So I'm not putting in any of these trades, right? The machine is putting them in. Now, some of your brokerages won't even allow you to do this, right? If you are in another part of the world, um, was the Nasdaq, ENQ. If you are in a another part of the world, um, couple of things, um, as it relates to stock market caddy. Um, we have no affiliation with anybody. right? And that's by design. We want to be able to do what we want to do when we want to do it. But we do use TradeStation. So we're very, very happy customer of TradeStation. Um, to be a monthly member, you don't have to have TradeStation. You don't. Um, to go through Q School, you don't have to have TradeStation. But if you do have TradeStation, you're going to get much more out of it. Um, who's hurting us here? The ES. Um, what was I going to say? Um, if you have designs on wanting to be an annual member to Stock Market Caddy and have all of these tools on your desktop, all of our tools will only work on TradeStation. So you would need to have TradeStation. So the question that you want to ask or research, if you're especially if you're in another part of the world, do you have access to TradeStation? And in particular, do you have the same platform that we have here in the States? That's what you want to find out. Um, we're all learning, even here in the States, that, some countries are more free than others. We're pretty free when it comes to the markets. We're pretty free in a lot of respects, but in a lot of respects, we're not. In other parts of the country, you've got, and it's surprising in some countries, you've got some regulations about doing this sort of thing. And that's unfortunate. But so we'll stay out of, I can't possibly know what that is, but that would be one of the questions that I would want to pursue. Now we trade futures intraday. Why? They're highly liquid. We have market access and they offer us very nice leverage. We're very respectful of our leverage, though. We trade proportionately. We're very, very respectful of it. We're not, you know, we're not, abusing it. So we do review that in Q School as to, trading proportionately. If we're going to go out a few days, a few weeks, or a few months on a trade, we're going to use options. Now, we may trade around those positions with futures, but for the most part, we're going to use options and they're going to be defined risk options. So going back, and if you go back and listen to our videos, in the last week or so before this correction, Susan and I were putting on directionally short options going out to the end of January and February, and they're doing beautifully. So we have monies that are a little, we'd call that, still short term, but not intraday. Now, we do invest. It's just that we're not very invested in any stock today. Investment for us is anything that we plan on holding for a year or more. And we will, in that instance, we will average in. And by the way, when the further out we go, or an investment, we don't use leverage, little to no leverage. So the further out we go, we use less and less leverage. Make sense? All right. And so we're having a mixed morning. Let's go I'm going to take a peek at swing. Yeah, so this would be, wish you could see this. We'll try to do this next week, but Swing Machine is nailing these trades. And we chose to run this program at the beginning of the week, and we wanted to stay with this program. It's a good program. You can run this program not just on Rinko, but you can run it on Line Break. It can be run on other things. It can be run on Time, maybe, so. Um, but Swing Machine right now is really kicking our butt because the NQ, it's up 2,500. It went long at 835. It went long 835. NQ is up 2,600. Dow is up. Russell is up. So they came in. They bought it up. It's up huge. Yen is up. Aussie dollar up. Okay, so we're having a draw on our account. That's normal. I one time had a person not too long ago, and it's okay. I mean, people don't know what they don't know. It's like, Why is your account down? Why is the position down?" Nobody has a position or an account that goes peak to peak to peak to peak to peak. It never draws down. That's not normal, right? That's not real. Yeah, Sil is asking, the name of this algo it's an intraday. It's what we call opening T-ball. So, Sil, and this is for everybody. Um, w when we have monthly members get to see our algos at a nightly basis, and therefore they get to see where they're positioned on a basically a daily basis, and in where the markets are for the most part closed. We believe that swing traders, which the vast bulk of our monthly members are swing traders, that a person is better to be working off of the closes. And this may sound like heresy coming from me, but not really paying attention to the intraday traffic. Um, if a person wants to trade the intraday traffic, then that's great. We do. We love to. In that instance, though, you would want to have the tools that you see at night as a monthly member. You'd actually want to have those tools and more on your own desktop so that you can get the information intraday, intraday. Things are happening much too fast, much too quickly for me or for anyone to be tweeting out to you or alerting you or texting you alerts or so forth. Um, it's just happening. So what we're doing is hopefully, providing folks the education, and it's fine to be a swing trader, right? It's fine. I mean, we swing trade, right? So we do. And so when our positions are on for swing basis, I'm not watching those positions every minute of every day. I'm not at all. Look at them at the end of the day, and that's that. And then we generally, with our options too, we make our decisions to enter and exit most of the time at the end of the day, not at the beginning. Okay, so we got another order in there. But if you want to be doing this sort of thing, trading intraday, then you would want to be an annual member, and you'd want to we have about 70, at last count, 70 proprietary tools, and there's just, you know, an infinite combination of things that you can do, and it would be on your computer. But you want to find out, do you have the same TradeStation platform that we have? If that's going to be the direction you want to go. And so you want to make sure now, there's some countries they're not letting. But again, it's not a trade station thing. I think it's a regulatory thing. Does that make sense? So I know that and the other part is that and we know that we're slowing the membership down. Um, but that's just the way it needs to be because um folks will say, well, I want to be a monthly member, but I want to have Swing Machine on my desktop, or I want to be able to see Swing Machine. The problem with that is um, when you start moving from a swing trader to intraday, you really do need to make sure that you have a really good education, trading education, and we want to make sure that we impart that to everybody. Um, because what can happen is a person can be very successful swing trading slash investing, and then they they suddenly say, well, honey, I'm going to quit my job and I'm going to do everything I've been doing and I'm going to start trading intraday. And then suddenly they don't do very well. Um, it's a different animal. It's a different approach. So, but that's why we structure things the way that we do. And so I hope that makes sense. Yes, still that is a great way to go. The Nicholas timing model is not going to give a on a monthly, for a monthly view and at night. It's a daily signal, but it doesn't change every day. And it can be in positions for days or for weeks. And it can and of course will fluctuate, but it's very, very good. Um, we do absolutely have members that, and it takes quite a bit of capital to take all those futures contracts overnight on the Nicholas. But we have members, and what they'll do is though, if Nicholas goes short, then they'll get options on the S&P. Okay. Um, and if it goes long, they'll get options. They'll take it as a nice big broad signal, and that's a wonderful way to start and just to go slow. And to get it, and now at night, you also get a tool that we call the Options Club Selector, and it's presenting option trades. And so they getting those every night. So we are suffering a little bit of a draw. Again, if these numbers are too big for you, it's oh man, that wouldn't be good. Please understand, this is all scalable, right? Um, so um, you can trade, I don't want anyone to be spooked with futures that, man, I can't risk that. You can trade, with micros, and you don't have to be trading five markets. We got five markets that are trading here. So, um, and it isn't possible to trade without, what we call drawdowns, either a drawdown on a specific trade or even on our account. So, but we do keep a casual eye on the account, and we're not happy with anytime you get a drawdown, you're not happy with it, but we try not to be making decisions purely on the money. Sometimes we have to intervene and say, okay, we got to put a stop to things. The market conditions change. Now, Swing Machine would have been, we'll probably set that up next week. It's just I can't because we addressed this screen up here with Zoom. I can't show you a Swing Machine, but maybe can I? Yeah, no. Well, you can see even here, because see, I dressed this up because of but this is just a portion of Swing Machine going in here. I I dressed up this view using Zoom so you can't when I change workspaces, we can't see the full image. But that's a great way to start, Sil. And the membership is monthly. It's month to month. Now, Sil, when you see the nightly video on the members webpage, right beside that tab, there's a place where you can start, and there are little tutorial videos that explain the algos that you'll be seeing at night. And we just encourage everybody just to go slow. The market's here every single day, every single week. Sometimes it's really slow, sometimes it's really fast. And we're going to be here, hopefully, and you want to be here, day in and day out, presumably trading in the market. Hi, sorry about that. I just had to speak with our landscaper. And that's what's nice also about, program trading. I'm not te necessarily tethered to the machine, I don't have to be here every minute of every day. So, I just want you to know that. Nor would you. Um, Sil is asking us, um, I have an account where I can trade CFD futures. I don't know what CFD is. I don't know. Commodity, I don't know. That would not be the best option to trade overnight. I trade options, I think, but I can't trade options, but I never did. So I have to learn that first. Well, that's very mature on your part. Everybody should do that. Don't start trading something that you don't understand, whatever it is, including the product. So a lot of people trade options. They have no idea how options are even priced. So, um, So I think that's good. You do need options are a different animal than futures. Does this algo that we're running now have a stop loss built in according to your own risk management? It has exits, but it does not have a maximum, stop loss built. It has a technical stop. Now, some of our and you could put in, and a lot of our programs do. The placement of a stop is the entry is the most important feature of any program. The entry. Get the entry wrong, then the stop is going to be worthless. But the stops are also important. But if you're putting on a stop that is too close and you're trying to manage an outcome through through just a stop loss, that probably isn't going to work out real well. Going to probably overtrade. Um, so we try, sometimes we'll put on a stop loss, that'll prevent a negative outlier. But the technical stop in this strategy is such that we're not too concerned with a negative outlier. But we could put one in overall. When it comes to, the idea of a stop loss, you could have a strategy that is in essence flipping coins, head or tails, 50-50. And if you could set a profit target at $100 and a stop loss at 100, your profit factor is going to be zero point 0.9 to 1.1 over time. That's where it's going to be. Um, so you kind of start with that. If you are flipping a coin, heads or tails, this is and we see this on the internet too, and people they're selling. See, we're not right, we're not selling or promoting win-loss ratios or outcomes. We're not because um your outcome is going to be your outcome, and it's going to be over time, and it's going to fluctuate, and your own personal outcome and the individual programs. But these people that are out there selling, oh, I got this program and it's got a 90% win-loss ratio. Well, we can generate a program to do that. You could do that with flipping a coin. And do you know how? If you have a strategy that is flipping a coin, heads or tails, and you set a profit target at $100 and you set a stop loss at 100, your profit factor is going to be zero point 0.9 to 1.1. And your win loss ratio is going to be what? About 50%, give or take. It's going to be around 50-50. But if you increase the stop loss to $200 and your profit target is 100, and this is what people do, right? They even do it subconsciously in their own trading. What does that do? Well, you win one. Are you going to win more? Yes. So if you increase the stop loss from 100, right? We were at 100, 100, and you increase the stop loss to 200, you're going to win more. Win-loss ratio. Your win-loss ratio is going to go from 50% to 75%. And you may think that's great and it feels good, but you probably still won't make any money because, and if you increase it to $300, your win-loss ratio will get up around 90%, but you still may not make any money. Because what happens is you're eating like a bird, you're making the 100, and it feels great, but then you're just one loss away. So when you're at 75%, that means you must maintain a win-loss ratio of 75% just to break even. You must maintain, if somebody's selling you a win-loss ratio of 90%, they're probably just widening the stop. And that means they may have a win-loss ratio of 90%, but that means you must maintain a win-loss ratio of 90% just to break even. So win-loss ratios are not important to us, but they are important to retail traders or to the uninitiated or the drop what we call the drive-bys, and I don't even know. I mean, some of these people that are selling that sort of thing, they may not even know themselves. Who God only knows. But we've made a study of this, and so I mean, you can win. For instance, I mean, you if you have 10 trades and you make $1,000 a trade 9 times in a row, great. You're gonna feel great. But if on that 10th trade you lose, 20 grand or 30 grand, then you're not going to feel so great. Um, so, so the stop loss we do use them as preventative, but we prefer to have exits that are technically based, not just a mere money number. And basically that's that. So this guy did work his way. We suffered a pretty good drawdown here. We got ourselves back. We're still profitable for the week, so we're fine. Programs are still running. The market has gone dormy here. Let's go take a peek. Oh my goodness. Do you see this? This is crazy, crazy, right? So let me bring this into view. This is Swing Machine, right? You see it here? I'm gonna have to slide this up. Take a look at the Nasdaq futures. Look at the S&P. At 8:35, Swing Machine goes long. There's a $3,000. Look at the NQ. 8:35, 6,500. 8:35 on the Dow, 1,900. You see that? Look at that. That's um, and you might be saying, why aren't you trading that? Well, we are in other aspects. So, um, but we'll get eyes on that again. We wanted to stay. We started with this program for the week, and we wanted to stay with it. So now that is Swing Machine intraday, right? You can trade, still is seeing Swing Machine, on a daily basis, on a daily basis. So you got to kind of just be more patient. If you are trading whatever it is you're buying and selling, if you are making decisions, and you'll know if you're making decisions purely off the money, you're trading greed and fear, and they will get you. Now, for better or for worse, we're only going to be up to about 11, maybe 11:30. For better or for worse, we've got things that we got to do, and particularly on Fridays. So we're trying to punch up, in the morning and give folks a view of who we are, what we're about, what we're looking at, what we're doing, and what might be possible for you. Now, what happens is, and you know, if you're trading the money, right? I mean, I literally know people that have, tons of money, millions of dollars. And what they'll do, and they're not traders, they're not even investors. They own shit they don't even know what they own and why they own. They don't. They just got put into it, and when the market goes up and goes up, and what they'll do is they'll call into their broker or their broker on their telephone or their account, two, three times a day. They may even do it. They probably look at their account more than we do, the overall account. And they're just, getting a number. And if it's going up, they feel good. And they're woo. And if it's going down, oh, they don't feel so good. And then and they stop making decisions to buy and sell, based on that feeling of greed and fear. It's an awful thing. Um, and then they'll get confused. The market, came, got hit hard, and now the market's bouncing. And then you'll have people, oh, I got to get in now. I got to get in now. Hello, hello, hello. I was on the phone. Yeah, Sil, if you're still there, I have to find a suitable tool and get familiar with AI. Yeah, so um, it, there isn't one tool, right? It's tools, right? Tools, markets, diversification. Diversification to us doesn't mean owning different shit. It means being able to do different things at different intervals, at different times. And you just have to say to oneself, is this something that I want to do? Do I have a passion to wanting to do this? Do I want to commit the time and capital to learn this over time? Or do I roll the dice and throw it not at us because we don't do it, but throw it to somebody else? If I was to do something like that, I'd probably have half a dozen people that I would do because I wouldn't bet, on any one individual. But we choose to, do our own thing. So, um, but no one is going to watch your money and grow your money more than you. They're just not, So if you think you have a boutique broker and you think he's got your interest at heart, I wish you the best on that. Um, But in any case, markets, let me just go take a peek at what's going on here. We've kind of gone, oh my goodness, look at that. And so now what happens is this is so can I maybe what we should do, I'm going to be signing off here in a moment. Um, Let me clear the deck here. Let me show you something. And we're going to clear our writing. Get ready. All right, so here's Swing Machine. All right. So here is the ES. And at 8:35, it goes long. You're up 5 grand. Look at this one, 8:35. 8:35. 9,400. 33, right? 24. Here are all the trades. Now, this is what's going to happen in the public. The other day, the Fed has a thing, the market goes down. Oh, they get all worried. They get all scared. They get nervous. They start, making emotional decisions. Now, today, the market comes back. Oh, everything's fine. Everything's fine. And now on top of it, there'll be other people, and we call them stock pimps. They'll get on CNBC and they'll start telling everybody, this was your opportunity. You should have been in there buying. You should have bought the dip. You should have bought the dip. And they're making decisions with their money that are all emotion based. They have no discipline. They have no um they just have no discipline. And you have to know that you are if you are in that mode, you're in that stadium with them. You ever see these pictures of the stadiums, in Chicago? It's like, 10 degrees out, it's snowing, and there'll be a big guy, have his shirt off and his face is painted, and he's hooting and hollering, and he's got his Santa's hat cap on. You'll see it this weekend, all around. Those are the people you're in the market with. They're in there. They're in here. And you're making decisions with your livelihood, with your family's livelihood, based on what those guys are doing. Just, all in. I'm going to buy because it's going up. We don't do that. We buy and sell on not one tool, but on multiple tools. And they're disciplined in rules-based trading and or investing. That's all I can tell you. It is what it is. But if you find yourself riding with the emotions and the narratives of the day, it's just going to be a really, really hard way to go. So I want to say thank you. I'll answer any last questions on YouTube. Sil, thank you. And we're gonna let everyone watch. We'll probably let everyone watch this view on Swing Machine up until about noon. We'll go another 30 minutes. If we get any more trades in on the others, I will let you know. It doesn't look like we're going to right now. So we had a modest week with the program, but we're profitable, so we're fine. And but all the stock pimps will now come out. Oh, it was a buying opportunity. See, you got to buy the dip, and and Bitcoin's going back to 106,000. Maybe it is. Maybe it is going back to 106,000. Maybe it's going to 110,000. Maybe it's going to 50,000. I mean, I don't know. I don't really care. I really don't care. We get in and make our trades and make our bread and get out. Once again, thank you. I'll let you watch. If there's any questions, give us a shout. And let me clean this up a little bit here. I'll just put you don't want to look at my noise bar down here. I'll just kind of zero that out. There you go. We'll just mark this up here a little bit. The programs are still running, and but let's take a peek at something. Watch this. Let's look at the VIX on a 5 minute. The VIX goes short at what time? 8:35. 8:35. Now, let's look at the S&P at 8:35. One mini contract, you're up 5,000. How about the NASDAQ? 8:35. You're up 9,000. 8:35. 3,000. 8:35. 2,200. Look at gold. Long. 2,200. 840. Look at silver. 8:35. Look at Bitcoin. 8:35. 8:35. Now, there's probably a story out there. I don't know. Maybe that story is right. I'm sure there is. I'm sure something happened at 8:30 or 8:35. Maybe one of the Fed governors, farted or whatever. Somebody did something, right? And then the news media will be reporting that's why the market went up. Well, maybe it is. Maybe it isn't. Maybe, maybe the market went up because the Federal Reserve did something with liquidity. Maybe they influenced the hedge funds to take advantage of an oversold condition and gave them the liquidity to come in here in the futures markets and calm everybody down. How do they calm them down? They run the market back up and everyone goes, oh, okay. I guess I don't have to sell everything before Christmas, but they'll get them again. And it is what it is, right? We don't ask why. I don't care. I'm not the smartest guy in the room. I don't care. It is what it is. But when we're tracking the VIX, when we're tracking interest rates, when we're tracking the money flow, and we put mathematical algos on there, they don't have any emotions. They don't. But even a person who has them, you're going to have to learn to control your emotions. You are going to have to learn to take that TV and throw it in the pool. Stop listening to the bullshit. You got to stop. Now, I listen with what I call a 10 ear. But if you are getting them get in your head, it's just going to be that much harder. You got to get it, let it go. You know instinctually what this is and what it isn't. You have to, if you are a critical thinker. It isn't real. It is what it is, but it isn't, you know, whether it's Bitcoin, whether it's Intel, whether it's Nvidia, it's just money flowing one way and flowing the other. Do you have the patience? Do you have the discipline? Do you have the capital? Do you have it to just say, I'm going to do A, B, and C this week, for better or for worse? This is what I'm going to do. And I'm going to be happy. If I make $350 for the week, I'm going to be happy. Not, oh man, I could have made $9,000 in 2 hours. Don't get sucked in. You will get there in time. You will. But you've got to learn to play the game. Now, we equate it to a game, but it's a serious game. I know that. This is real money, real opportunity. You've worked hard for every dollar that you have, yen, Aussie dollar, Canadian dollar. You've worked hard for it. You've got to protect your trading capital. You've got to protect your psyche. This is why we opt to hedge, right? But if you're putting on trades for this reason or that reason, and then you forget what you did and why you did it, or you didn't know why you did it, didn't understand, and then you get yourself into a position where you're watching your account value and you're checking your account value minute by minute or every 2, 3 hours on your phone. Oh, I'm up in the money. I'll be honest, you'd be better off and probably find it a lot more satisfying just to take, a suitcase of money and go to the Indian casino and play for a few hours. We're not doing that. We're not. It may look like that, but we're not. And that's why we require the Q school for anyone who's going to get these tools, because I got to make damn sure that I've given you my best quality time that I can afford to give you before you get underway. But you're going to have to implement it yourself, and but there is no way in hell, no way that I'm going to let a person sign up for a monthly membership at $100 a month and give them access to Swing Machine or these algos that they don't know how to use. No way. No way. Because it would be like letting somebody, buy a Lamborghini just because they have the money and they have a license. And then, they'll go down the street and wrap it around a telephone pole. They don't know how to drive it. And they do it. I'm not gonna do that. So not gonna happen. The likelihood that a retail trader brand new is even going to still be in this trade here being up 10,400 is probably slim and none. But there's literally no reason. I don't see any reason in here. And we certainly have members that are trading swing machine, um, that are in these. That's one mini contract since 835. If you have a micro, you're up 1,000. If you have 10 minis, you're up 100,000. You're up 60,000. It's all scalable. But where are we on the daily bagger? What really is going on? So let me break away these brackets for you. Okay. And so now this is where I may gain someone or I may lose someone. Well, isn't it just money? Isn't it just the trade? No, entries matter. Entries matter, right? Um, Intervals matter. You've got to decide that, but you have to understand and experience this. So let's go here for a minute. The daily, the daily VIX went long 2 days ago. You see, it was up into euphoria. What that meant was that the public, they were panicking. They never make good decisions when they panic. Let's go to the S&P on a daily. Here we are. The other day, they were in panic mode. They were buying puts up here and they were puking out their shares down here. All we're doing, all we're doing today it's just a tradable bounce. It is a tradable bounce. And if you had had this tool on your desktop and you saw the VIX in euphoria and you saw the S&P in panic and you had just a modicum of trading experience, what could you have done? Now, a modicum. I'm not saying that trading a futures contract, a mini, is a modicum of trading experience. No, you need more than just a modicum. But you could have come in with a modicum of what I mean by that is just a moderate level of a trading experience. You could have come in yesterday when they were all panicking and not bought a call for today, not a zero DTE, not a zero DTE, but you could have bought a call for 2 to 3 weeks and you'd be making some money. You could have sold a call credit spread for a few weeks and you'd be profitable today. But if you don't know what that is and you don't know how to do that, I can't give that. I can give you the knowledge, but at some point as a trader, if this is what you're going to do, you have to start to do it and execute. It does no good to just have a trade. And this is the thing about trading. I will hear some brokers say, it's a fool's errand because, you're going to have to make decision after decision. And to a certain extent, I'm not saying it's a fool's errand, but you do have to, the brokers and brokers are right. You do have to do it over and over again. You don't have to win on every single trade, but you do have to get in every day or every week and trade, if you're going to extract cash flow. So it better be something you like to do. If you just happen to have a few days off and it's the holidays and you're buying and selling, selling and buying, have a good time. I guess it's maybe more comfortable than going to the casino, but you probably have more fun if you go to the casino. But if you're intent on learning to trade as a business, then we're intent and we're prepared to spend good quality time with you and to hopefully get you started. There are no more Q schools for this year, right? We're not doing anything. You can't sign up for a Q school now, but we are taking reservations. You got to put hard, earnest money down. It's first come, first serve going into next year. Give us a shout. Let us know when you want to do it. Let's get it scheduled and we'll be underway. But from a daily standpoint, this buying action here is nothing more than, sorry, Gracie, a dead cat bounce. That's all. It's not. And the VIX could come all the way back down to 1745 and the S&P could bounce back up to, 6100. I don't think it's going to get there, but it could. And what would it be? It would be an opportunity to sell, not an opportunity to buy. But the public, God knows what they're feeding them today. I don't know what the headline is, but there's probably some headline, and they're all, going to be in a Christmas spirit and buy, buy, buy. Scary, scary. Let's put this on a weekly basis. A weekly. Now, this truly is the investor. Look where it is. It's in the middle. And how about on a weekly? Weekly, we're at 50. We were up higher. How about a monthly? Monthly. This guy is Rip Van Winkle. And here is, now we're going to have to put this on a continuous contract because we don't have the data. Let's put this on a monthly. The last monthly signal was in 2010. In 2010. The monthly investor, he should not be paying attention to anything happening intraday. He or she should not be paying attention to anything that's happening day to day. They should not be paying attention to anything that's happening intra-week. Maybe from week to week, they casually get a glimpse, but they do want to pay attention to where they are on the monthly. The last monthly signal was December of 2010. On the fair gauge, they're at 70. Could they go higher? Yes, they could. They could. A reversion to the mean would bring this S&P down on a monthly down to 5490. But could this market on a monthly basis get into a bear market and panic out? Yes, it absolutely could. Do I know where the market would be in panic? No, I do not. But it's safe to say that if that was to occur, the S&P could probably go to 3,000 or less. So, people have to decide, it's your money, it's your bread. If I put my money into a 5-year treasury right now, I can get my money back in 5 years, 2 years, and I can get 4.5% to 5% safe return without risking any original capital. Ordinarily, 100 years of data, 200 years, the market returns with 10%, right? So return much more than that because we're so extended. But you mean to tell me that folks are comfortable risking a 50% correction in their IRA account because they're chasing an additional 5%, to me, that's nuts. To me, that is the guy in the stadium this weekend that'll be 20 degrees with his shirt off and his belly and face painted, with a Santa's cap on. He's out of his mind. But he's more than entitled to do whatever the hell he wants to do. It's his money and his time. I'm certainly not going to do it. But these are the tools that we use that you could be using. And I'm not going to make the decision for you. I'm going to show you how we would go about, but then you make the decision from there. But it's, perspective here. Um, we'll put this back to a 5 minute. Big, beautiful bounce. And if you think that, well, what I'm going to do is the next time it sells off, 1,000 points like that, I'm going to step in and I'm going to buy it. Oh, well, maybe, but I don't know where it'll be on the radar. But you've also got to, and this tells us, and these tools tell us, where we need to exit. So is asking us, where is the stop? Where is the exit? So you've got to learn that. So if you get it wrong, you can be out of harm's way. But what happened, partly people panicked yesterday, and then other people, retail traders, decided to do what? Get short in the hole. And now they're getting their head ripped off. And they'll capitulate. They'll cover out. And maybe next week it's a holiday week, so it's maybe not likely. But we'll be right back down the other side. And they'll say would have, could have, should have. Entries matter. I wish everyone the best. If you got any questions, let us know. We're going to leave this image up until noon, and then we got to turn down and get to work. Thank you. Thank you. Okay, everyone, we'll give you one last look. This was the tool we're looking at here for the week. And we'll still be running, and we'll give you a chance next week to see something a little bit different. I'm Bag On. This is Stock Market Caddy, and feel free to give us a shout, and we wish you the best, everybody.